Hello everyone, welcome back to Chill Trades, the most accurate stock market channel on YouTube. Today we're going to be doing another video on Ford. The reason we're doing another video on Ford because a lot has happened. Made a video a couple weeks ago and we didn't get quite as big of a pullback as we thought, and so we're going to do an update, quick news update about what I like, what I'm not liking so much in the short term, and then a technical analysis. Please hit the sub button, join the squad. Let's get into it. So the first thing I want to say is, why has Ford stock been going crazy? First thing I want to say is valuation. So this isn't exactly the perfect Ford PE, but right now PE, is kind of expensive. Paying 30 times for a Ford is pretty significant. It's not growing that much to house a 30 PE ratio. Because when we think of Ford, it is a value company, it's a value stock. But when we look in the future, forward PE ratio, we're only at a 10, and so what that's telling us is people are expecting Ford to continue to grow. Obviously, we had the news come out today about the infrastructure bill. That's giving Ford a lot of positive momentum. That's why the stock is up. What did it end today? Up 5% on the day. I think if you told someone Ford would be up 5%, or 40% in the last few weeks, they would tell you you're crazy. And so it's getting a lot of hype off future growth projections or possibilities. And let's kind of jump into what some of those reasons are. So one of the reasons I love Ford the most is because they're really figuring out the direction to go with their trucks. And so this whole idea of tiny trucks is such a genius idea for multiple reasons. One is Ford is going towards EV. So EV is growing. Obviously, we know we have a government that's super EV focused, and so they're going to be pouring into companies and infrastructures to grow that. And when infrastructure grows, people are going to be buying more EVs, tax credits, more places to charge your EVs, XYZ. And I think what Ford is doing really well is that they're making these tiny trucks. So trucks that are smaller, they have better gas mileage. One of the biggest issues is that EV cars are still so expensive, and for them doing a tiny truck that I believe is in the 20 to 30K range is an amazing win. And I think this is going to be their biggest seller for a vehicle. In a couple years, we're going to look back and be like, wow, I personally think this tiny truck is going to be a super big win for Ford. So this is something we want to keep in our eyes out on. Is I think this is going to be a big winner, and I think part of the reason why we're seeing such drastic moves in the Ford stock. Second thing is Ford just broke above $20. So off of the infrastructure bill, we got the push because Ford is investing so much in EV. But it's hitting above $20 for the first time in 20 years. So if you really look, we'll look at it in a second, but Ford stock is kind of like this for the last 20 years and more down sloping than up sloping. And so we'll break that down, but this is a pretty big win. And so if Ford can maybe hang out at $20 for a little while, there's a high probability that this stock could go higher, and we'll break down where. And the last thing I want to look at in news is that Ford is going to be repurchasing up to $5 billion in junk bonds. And so to give some history on Ford is they've been basically struggling for a really long time. I don't think they've really figured out a business model with, I would say, all the new competition in the market. And I think they're starting to figure things out. We also have big demand right now. Their profit margins are going up, and so Ford could finally start repaying some of their crappy or junk bonds, which is going to help restore their credit score. So that's going to help get bigger investors in, because when you think of, say, you have, I think one of their investors, who was it? It is retirement systems. So you have these big funds that have people's retirement accounts in them and things like. When their credit score goes up, those are the kind of investors that start jumping in. And so this is going to be a really big win for Ford. They start paying down their bad debt. They get rid of these really bad bonds. They reestablish their dividend. These are all wins to Ford for the long term. And the last thing I want to look at is kind of where I'm a little more pessimist. And I talked about this in my last video is, let's see. Ford has really not grown that much. Obviously, as a big company, we see sales growing up a little bit year over year, but when we look at September, so their earnings came out and they had a really big surge on their earnings. I honestly was not that impressed. And the main reason is when we look year over year, the earnings is down about 4%. And, we got a lot of complaints about demand, or not demand, but supply chain issues, things like that. But I think the part that a lot of companies are hiding personally, is that demand is slowing. And so the reason I bring that up is because what we're seeing what we saw the last year was that the government basically gave people free money. Everyone got like $5,000 to $10,000 depending on the size of your family. And so what we know is that the average car value, or the average life of a car, was getting to 12 years. And on average, people buy cars every 10 years. And so what you had is this big surge of people with now available cash buying cars because they had the $3,000 or $4,000 to put down on the vehicle when they bought it. But in my opinion, these funds are running out. And now that these funds are running out for the consumer or the everyday person, I think that's going to slow down car sales. Because these are things, we're seeing the housing market slow down. People are buying less homes because prices have appreciated so much. And in the car industry, because of supply shocks, you have to buy a car for at sticker price or above. And so now that people have less money, they're not going to be willing to buy cars for that high of price. And in my opinion, we are going to see a softening. So those are some things to kind of put on your map. On the flip side, as I said, I think their small trucks, lower price point, electric trucks at a lower price point are going to be a big winner for them above their competition, which could help their revenue, even though I do think the revenue is going to shrink. And the last thing I want to bring up is just institutional buying, because I love to bring up the updates. We're kind of seeing neck and neck buying and selling back and forth. Doesn't really tell us too much about the stock price moving forward. But just to put in perspective, guys, Ford is up 33% in the last month, 46% in the last 3 months, and 130% year to date. Year performance, 160%. Guys, Ford stock, this is a company that is not supposed to move like this. And so when you have these parabolic moves, I'm going really long term here. So this is a weekly chart. When we have moves this parabolic on Ford, this is a big no-no. Now that we're here, we have this violent move and we have RSI up at this 80 range. When we zoom out, RSI typically doesn't get over 80. When we zoom out for the last 20 years, 30, 40 years basically, you see that RSI typically always tops out around 80 on these big bull runs. So in my opinion, doesn't mean the stock can't go higher. I'm not saying that. But what I'm saying in the short term, I would not be buying here at $20. Because when we zoom out, we have really big resistance at $21 to $22, and that's basically $1 or $2 away. So maybe if you want to take a risk, in my opinion, let it settle down a little bit. But when we look big picture, these are things we want to look at. Okay, so big picture. First thing is we broke out of essentially, what is that? A 20-year downward trend for the stock. This is the 2000 peak in the market, the dot-com bubble, and we basically saw a downtrend since then. Back in January, we broke out of that, and this is why we're seeing violent price action. So that's a really big win for Ford, big picture. On the flip side, on the weekly chart, we have this breakout up, down, up. Guys, we're very, very close to a pullback. It's probably not worth it to buy at this point. Maybe we'll get to around $22 in the best case scenario, but that's probably unlikely. We have this giant, and look at where the 20 moving averages are. I always like to use 20 moving averages. The 20 moving average is at $15, and we're at $20. The 20 moving average has never pulled that far away from the stock. What was that, 15? Or it moved that far back here, but that's as far as it got. And so this is something we want to keep an eye on. We're just too far away from a technical standpoint, and this is what we want to look at. And we need a pullback, and we'll get to that in a second of where that pullback could be. But just looking big picture, this is what we have to keep an eye on. And I mentioned this in my first Ford video back in May, is this was a crazy time for the market, which we might get back there, we could, but we're coming up in really big resistance. So let's go to the daily chart to kind of figure out where we could be going from here. And so let's put some more short-term trend lines here. So there's a couple things we want to be looking at. One is, and I say this in every video, the last time I made a video, I said don't buy at 16. I think, or wait, was that 16? I can't remember when I made the last video. That might have been 16. I said, wait for a little pullback. We didn't get too much of a pullback, which was a little surprising for me. It was right here, yeah, 16. We did get a little pullback down to 15, from 17 to 15, which you could have bought there. But then we gapped up and went crazy, and now we need another pullback. When we look at the 20-day moving averages, they're at $17. We're at $20 and about 50 cents. We need a pullback. And so those are the main key points I'm going to be looking for at a pullback. So when we zoom out, actually I'm going to zoom out back to the weekly because I want to get some long-term resistance in here, or support. So when we zoom back here, because this is the range we're in, we're probably not going to break back below 17. I'll be very surprised if we break below, I'll say 16. I'll be very surprised if we break below 16, but we do want to look for a pullback. Does that mean you should sell your shares? That's not what I'm saying, guys. I'm not telling you to sell your shares here. That's your decision, but that's not what we're saying. We're saying wait for a pullback if you want to buy. The other thing we can do, and this is kind of what I'm lining up, is buying a put option. So this is something I did today. Is I bought a put option for a strike price of $18, and I put it out into December. And because all the indicators are extremely are just at extreme levels, and that typically means you're going to get a pullback relatively soon. So if we push up to this $22 price range, I'll be doubling down on my put option to lower my price, because at some point we're going to get a pullback to this, I would say $18 to $16 range is probably most likely. But when we dive in, let's find some other potential resistance points or support levels. So yeah, we don't really have anything above 19. We kind of have a support at 20, but I would say that's more unlikely because the price is just so close to that. You know, we're only at $20.40. I just moved my thing. We're at $20.40. And so a pullback to 20 is really not that big of a deal, especially when we're so far away from the moving averages and we're so overbought at 83 on the RSI. So as this continues to creep up, I'm personally expecting it to somewhere around this $18, because when something moves up so drastically and so quickly, it typically is countered with a pullback as drastic to the, in the rate of falling. It doesn't mean we're going to go back down to $15, but what it means is we're going to fall quickly. And so that's why I put something out into December, just give me enough space in case the market does pull back slowly. But most likely we're going to get a pretty violent pullback. And that's why I put my to around $18 for my put option. So those are some levels to look at. My main thing is here is just be cautious. Know that we're very, very close to long time resistance at that $21 or $22. We're at extreme resistance. The last time we were up that high, obviously the company's different and potentially a lot bigger than it was in 2000, but there's other factors in that than the share price. But the main thing is we're at big resistance, and when big resistance is hit, that typically means, especially when RSI is so high and we're so overextended from our moving averages, that typically lines up with a pullback for the stock. So those are things to look out for. If you own some shares, you know, I'm not saying sell them, but what I'm saying is consider opening a put option or wait to buy if you haven't bought yet. That's all I have for you guys. I appreciate you stopping by. I promise that I'll have Monday, Wednesday, Friday videos this week. My week's been a little crazy. The last couple of weeks have been a little crazy for me. If I haven't shared already, I work in e-commerce and it's Christmas season. And so the holiday season is always insane and my schedule is very busy. But I'll get videos to you guys. Appreciate you always watching, and I'll see you again Wednesday.